Originally in my strategy, I thought, well, I would convert more of this, especially if it's my asset protection gold, into the new currency once I was certain, and it's easy to tell. I'll tell you how I know when this whole game is over, when they back it with gold. Then it's over. Central banks are accumulating gold. Physical. Real physical gold in their vaults, because they are very clear on what they're doing to this garbage, and they don't even want you to have this garbage. They're very clear on it. They have been net buyers since 2010. You know, interestingly enough, if you look at the long-term chart on central banks and their gold buying, they really started buying back in 2000. I think it was 2006 or 2005. That's when you saw a bottom and then an increase. So you had fewer central banks selling and more central banks buying. And by 2010, it was all net. You know, 0.9 tons. So here's a big one. The Philippines, 7.91 tons. I think that's the biggest one. But up here, you're looking at Thailand buying 90.2 tons. And Brazil buying 53.75 tons. And Turkey even buying 8.67 tons. And what do we know about these countries? And what do we know about all the countries in the world? We're all vulnerable. Your risks are increasing every single day. Do you know that? Do you realize it? It's really why we need to make sure that we are protected and as self-sufficient as possible. I love the title, Global Financial Stability Report, COVID-19, Crypto and Climate, Navigating Challenging Transitions. We have an awful lot of transitions that we need to navigate. And what's been the central banker global answer? Well, easier credit, more debt, because that's what the system is based on, is credit and debt. So up here, it's where they're tightening, and you can see here's 2008. So when a crisis hits, that's when the tightening occurs. Here's 2020. This is when the tightening occurs. Now, the U.S. is in a black line, but it doesn't frankly really matter because everybody's the same. So what they say in the report is financial conditions in advanced economies, AE, advanced economies, have eased further, buoyed by expectations that monetary policy will remain accommodative. In other words, that they will keep printing new money and issuing cheap credit to support the markets, those that have been chosen to win in this game. You can make it that you're the one that wins and therefore everybody around you, but central banks don't really choose to do that. Conditions remain very accommodative, very easy for those that have access to those funds. So not the normal guy on the street typically, but the big kahunas, the banks, the big tech companies, the big corporations, etc. But they also state that financial vulnerabilities remain elevated in a number of sectors, and we're going to be looking at those sectors here shortly. Because quite honestly, central banks are between a rock and a hard place. Now, it is certainly of their own doing, because in a normal capitalist system, if you make a mistake and you fail, you fail. But in the system that we're in, the crony capitalism, really more even towards fascism, since corporations are clearly more important than the individual, you get bailed out. The taxpayer bails you out. And I really like you to keep in mind that every time they talk about the government spending money, what the government is doing is spending your money. Now, forgive me on this. I'm going to read this whole thing, but I'm going to stop and make comments along the way because there's a lot of stuff to comment in here. So a year and a half into the COVID-19 pandemic, policymakers are confronted with a challenging trade-off. Maintaining near-term support to the global economy. So in other words, continuing to print money and give money away for free to those that are closest to the central banks. And let's see, while preventing unintended consequences and medium-term financial stability risks. So what are those unintended consequences? Well, some of them they don't even know about yet. Some of them they've discovered, like in the reverse repos, where they're now trying to maintain that after unleashing that genie. Not going very well. Demand continues to be extremely strong, like trillions of dollars in a day. A prolonged period of extremely easy financial conditions, while needed to sustain the economic recovery, may result, it might, it hasn't done this yet according to this report, may result in overly stretched asset valuations, you think, and could fuel financial vulnerabilities. Yeah, you think? Because what goes up, nothing goes straight up, nothing goes straight down. You always have to have some bouncing, but there hasn't been very much bouncing to the upside because that's where the government and the central banks want you to hold your wealth. Inside the markets, because it's very easy to take it away from you. And who are you going to call? Ghostbusters? Yeah. Some warning signs, for example, increased financial risk-taking, and rising fragilities in the non-bank financial institutions sector, so fintech, etc., point to a deterioration in underlying financial stability foundations. So there is growing vulnerability in the foundation of the global financial system. This is what they're really saying to you. If left unchecked, oh, blah, blah, blah. It is unchecked because if they stop, and I know that, well, look at what just happened in Australia, right? They came out and said that they will protect with the yield curve control, which all of the central banks are doing. At this juncture in the trend, I prefer to hold my wealth because we have a choice until we don't. And I would always rather be 2 weeks too early, 10 years too early. I don't really care. I would always rather be early than even 1 second too late because that 1 second could cost you all of your choices. We need more than gold and silver during this transition. We need food, water, energy, security, community, and shelter, as well as asset protection and wealth preservation. We need all of those things. So please start today because I don't know how much longer this can go, but Australia could be a warning for us. We'll have to keep an eye on it. We may be losing choices sooner than you would think.